Pension funds around the U.S. are suffering from persistent underfunding, but that's not the case for some of Florida's retiring first responders. Tampa's firefighter and police fund was up more than 21% over the last 12 months, and the plan's value is now over $2.9 billion. That's thanks to the success of their sole management company, Bowen over the past 50 years. The company's president and CIO, Jay Bowen, joins me now. Jay, I hear mutual fund managers bragging about their 1 year, their 3 year, their 5 year. Yours is more like the 5 year, the 10 year, the 20 year, and you've been at it for 50 years. How are you outperforming over such a long time period? Spill all of your secrets.
Okay, well, it's great to be here. And I wish I could provide you with something more dynamic and provocative in terms of our style and approach, but it's really quite boring.
Lay it on me.
At least somewhat boring. Top down, high quality, thematic, long term, balanced with an emphasis on equities. Interestingly, no alternatives, no pooled funds, no hedge funds, no private equity. We like to say that we're unconventionally conventional.
Let's talk about some of the stocks that you like. You mentioned top down. One of the themes you like is what's called the fourth industrial revolution. Tell me what you mean by that, and how does Honeywell fit into it?
Right. This fourth industrial revolution has been, we salivate at theme from a top-down standpoint. We really salivate when we get the opportunity to have a big mega theme like this with several investable trends. One of them, like you say, is this fourth industrial revolution. And it touches a whole variety of industries and companies, from the industrial sector to the healthcare sector to the financial sector. Honeywell in particular, it's a play on industrial automation. And there's quite a ramp in capital spending in industrial automation, industrial power management, and Honeywell's is one of the leaders. We like finding these companies that we call technology companies disguised as industrial companies, and Honeywell would fit into that category.
Two more like that, Eaton and Teledyne. What do you like about those?
Right, and Eaton would be more play on industrial power management. Again, technically an industrial company, but very sophisticated from a technology standpoint. And there's a big ramp up, like I say, in capital spending on upgrading the grid, on power management. So that's a play on that theme. The Teledyne, very interesting company, I think, from a valuation standpoint right now. It looks quite good, relatively speaking, the best it's looked in several years. They make, again, very sophisticated technology products for industrial growth markets, instrumentation, aerospace and defense, digital imaging, very strong balance sheet, very strong free cash flow, really attractive earnings prospects looking out.
And I understand you're bullish on financials in general and American Express in particular. Tell me about both.
Right. Very impressed with the financial theme would play into a couple of broader themes that we're looking at from the market standpoint for the balance of the year. I think we've got a shift in priorities in a couple of key areas. The Fed, number one, I think they're going to be shifting more towards preserving and protecting the business cycle away from the inflation story. American Express, very strong momentum. I was really impressed with their last earnings report in terms of they raised guidance, strong double-digit growth, top-end bottom line they're looking for. The products, and it's a very strong financial company.
Bringing in young customers, too.
Very strong financial company, superior credit quality. 60% of new card members last year were millennials and Gen Z. So very interesting, and doing very well in Japan also, which is powerful.
Interesting. Thank you, Jay Bowen.